for taking me. And I'm hoping that we can all be able to log in time. But I'd like us to just give a minute or two for our other attendees to at least come in, so that we can be able to all of us start off together. So thank you so much, everyone, and kindly keep logging in. Tag your friend, let your friend come in, let your colleague walk into the room, let anyone who you had invited also to come in now, so that we can be able to kick off this webinar for today. So we just have a minute or two for us to do that. Maybe as we log in, I can also encourage us to just type in the chat box where you're logging in from. So that we can be able to recognize all our attendees today. As we said, this is an East African webinar. So we'd like to recognize everyone from the different cities within East Africa: Nairobi, Kigali, Uganda, Addis. We can be able to just recognize your presence. So kindly, if you don't mind, you can just chat in the box, and we can be able to recognize where you're logging in from. All right, ladies and gentlemen, I think we are just about to hit the 5-minute mark. So looking forward to seeing us join more and more. I'd like to formally introduce myself. My name is Michael Karaoke, and I will be your host today. Welcome to this webinar by Digital Jewels and the Africa Fintech Network. And hopefully it's going to be of good value to you. As you type your name and where you're logging in from, you can also type your expectations for the session today. We have just about 1.5 hours with you. So we'd like to know what value would you like to bring to get out of this session with today. So just type it down there, so that in case by the end we've not answered your question, we can also pick it up and figure out how do we answer it for you. So keep typing where you're logging in from. Let me know what your expectations are for today, and we can be able to make sure to address them as we move along within the session. So I see Larissa from Cameroon. Welcome, Larissa. Thank you. Glad to have you here. I see Kimanzi Martin from Nairobi, Kenya. I see Bethel Amadi from South Africa. Glad to see everyone here. William Wemba from Lusaka, Zambia. Welcome, everyone. Kingsley from Lagos, my good friend. You're most welcome into the session. Let's keep logging in. Let's keep joining the session as we are kicking it off now. Remind your friend to make sure to get in the session within the time as we are kicking off right now. So I'd like to just basically formally welcome everyone into this session today. And our discussion today is about fintechs. And we're looking at this fintech dilemma, which is struggling exponential exponential performance with this stringent conformance, basically looking at what is our compliance landscape as fintechs, what do we need to do as fintechs to make sure that we comply with every regulator that is in the market today, what are the expectations of us as fintechs. And we'd like to have that conversation today. And with us, we have a rich panel that is, I believe, is going to add significant value to these conversations and to yourself also. We have the likes of Ken Njoroge, for those of us who are from Nairobi, the East African region and the large African session, who was the founder of Cellulant. We also have Njoki, who is one of our CEOs with Mamlaka Hub and Spoke. We have Patrick from Rwanda, who is the chief product engineer for Irembo. So we're glad to have this rich panel with us. And with us also, we have our MD and CEO from Digital Jewels, Adedoyin Odunfa, who will be moderating part of the conversations today, the fireside chat, and some of the conversations that you'll have today. We also have Dr. Patrick from the Africa Fintech Network, who is also one of our hosts today. And we're glad to have this aggregation of talent, of thought leaders, to be able to give us the value that I hope we can be able to have from this session today. So as we kick off this session, I hope you're expecting to have some good value added to you. And I hope it's going to be a worthwhile session with us today. So I'm just trying to check if Patrick has logged in. Just give me a minute. I believe he's still on his way. So I think once he's here, we'll give him his session. But so right now, I'd like to just jump into our agenda for today, and we can be able to have Tokumbo Taiwo, our CTO from Digital Jewels, to be able to make the initial presentation and set the context of what we are going to be discussing today. So Tokumbo, kindly take it away.
Thank you very much, Michael. Good morning, good afternoon, good evening, wherever you're joining us from across the globe. I'll be sharing my presentation slide. Please confirm you can see my screen now.
Yes, we can. Yes.
Thanks. All right. Thanks. Thanks, Michael, and welcome to our panelists and attendees. So today we're looking at Stradling Exponential Performance with Stringent Conformance. And just to say a little bit about Digital Jewels Africa. So we're an IT governance, risk, and compliance consulting firm with expertise also in capacity building, and we set out to strengthen IT governance across the African continent, one institution and one professional at a time. We are accredited by various bodies across the continent to provide services. We're also certified to some of the best practice standards and frameworks, including the ISO 27001, which is the Information Security Management System standard, and the ISO 9001, which is the Quality Management System standard. We partner with very reputable organizations to provide capacity building across the continent. We have our footprints across 15 African countries, though we have offices in 4 African countries. Right, we are the first professional services firm to be accredited by the PCI Security Standards Council as a QSA, and also hold those 2 certifications I mentioned earlier. for quality management and information security. We have a very rich track record that you can see on the screen, showing a number of organizations we've supported across the continent in implementing and sustaining various initiatives, around the best practice frameworks and standards. So what are we looking at today? Very briefly, we'll be looking at the evolution and the landscape currently when we talk about fintechs in Africa. We'll look at what has been driving the growth in this industry and what are some of the challenges that are being faced by the operators. We then look at the requirements across the regulatory landscape, the governance imperative when we consider those regulatory requirements and other challenges, and then we conclude. So, what has the story been like for fintechs in Africa? This is what the landscape currently looks like. And as you can see, we have fintechs from all across the regions in Africa being represented and providing very valuable services to the very large population that we have in Africa. The fintechs provide services across a wide range of areas. This include payments, game tech, wealth tech, reg tech, digital currencies, open finance, lending, insurance tech, among others. And in order to be able to grow their business, they've raised quite substantial sums of money to support their business. And as you can see on the screen here, the 4 major countries in Africa that have played very richly in this area include Nigeria, Kenya, South Africa, and Egypt, raising substantial amount of money over the years. The growth of the fintechs have also led to the emergence of a number of unicorns across the African continent within that space of fintechs. And in 4 countries across the continent, Nigeria, Ghana, Senegal, and Egypt, we've seen the emergence of a number of fintechs, as you can see on the screen. We look forward to more of them emerging as we proceed. Okay, the growth of the fintechs is expected to continue to grow, and their revenues is estimated to grow by about 8 times to reach 30 billion by 2025. And of course, that growth is across the various markets in which they operate. There are 11 key markets that have been identified, and they constitute 70% of Africa's GDP. And those countries also have 50% of the population. Yes, the growth will be across geographical boundaries, but they would also be across the various areas where the services are provided, as we can see on the screen, in blockchain, crypto, in wallets, in wealth management, in remittances, and very significantly in payments. So we expect that this growth will continue. And the Boston Consulting Group and QED investors estimate that by the year 2030, the growth would be about 13 times of what we have now, what we had about in 2021, with revenues growing to at least 65 billion by 2030. So there's room for a lot of growth in this industry. So what has driven this growth, and what are some of the challenges? So the growth drivers include the push for financial inclusion across the continent. We're trying to bring as many people as possible into the financial inclusion net. We don't want anyone to be excluded. There's also the dethroning of cash. A lot of governments, and their central banks are, moving towards cashless, encouraging cashless transactions. We've also seen the increased availability of funding for innovation over a period of time, although this has slowed down, as we'll see very soon. We've also seen fast growth in spending across the continent. Just as we have a young, fast-growing and urbanizing population on the continent, the increased digital penetration, enabled by telecoms and a number of other technologies, has also been a growth driver. And very significantly, the COVID pandemic, which drove adoption of technologies within that period. These have all served as growth drivers. So what are some of the challenges? They include funding, operational issues, infrastructure, fraud, cyber attacks, and skills shortages, which we'll talk about. In terms of funding, like I mentioned earlier, we've seen a cooling off of the funding, that we've seen in Africa. As you can see, over the last 3 years, from 1.5 trillion, it's come down to 340 by the first half of this year. So we've seen a slow decline in the amount of funds that are coming into the market. We've also seen operational issues across the continent with regards to the fintechs. Across the landscape as well, the ground is not level in terms of the operating environment that are provided in the various countries. So we have, various levels of maturity in terms of operating environment for the fintechs. We've also seen cyber attacks, and we should expect that given the nature of the business that the fintechs, provide. It has to do with a lot of funds, and it's all based on technology. So among the first top 10 countries on the cybercrime index that was published by the Oxford and New South Wales universities earlier this year, we have 1 out of 10 countries represented in Africa. And among the top 20, we have 3, indicating the scale of cyber attacks that the fintechs are facing. We've also seen fraud across the continent. This also is a major challenge for these organizations. And very significantly is skills shortage. So on the African continent, we have quite a big challenge when it comes to skills shortage. And on the demand side, the emergence of disruptive technologies, as well as dynamic consumer behavior. Consumers are demanding so much. They want a lot more and at a very cheap price, as well as the transformation that was induced by the COVID pandemic, like I mentioned earlier. All of these are driving the demand for skills. But on the other side, we're having a weak supply of talent. So we are experiencing monumental brain drain from Africa to other regions of the world. And in addition to that, we have a weak and inadequate digital and soft skill pipeline from our educational system, which is also not providing the sort of support that is required. So there's an imbalance between the demand and supply. These are some of the challenges that the fintechs are facing. So let's move now and look at the requirements across the regulatory landscape. So the central banks, who are the major regulators for the fintechs, have certain requirements for the fintechs. And this cut across a number of capability areas. I will just run through them very quickly. So one of them is information security, which is very key. And a very well-known and accepted best practice standard for this is the ISO 27001, which is globally recognized as the information security management standard. So quite a number of regulators across the continent mandate this. It's mandated in Nigeria and Ghana. While it is not mandated in Kenya and Rwanda, for example, the requirements that are prescribed by the regulators in these 2 countries are satisfied by the ISO 27001. What that means is that implementing the ISO 27001 will support in meeting the compliance requirements when it comes to information security. In addition to that, there is also the PCI DSS, which is the Payment Card Industry Data Security Standard, which is a global standard for safeguarding card data. This is mandated by the regulators in Nigeria and Ghana, just as it is in Kenya and Rwanda. So anyone who is playing in this field, even by the card brands, is expected to implement the PCI DSS standard. Now, moving on to cybersecurity, we also have a number of best practice frameworks and standards. One of the standards is the ISO 27032, which provides guidance on cybersecurity, and it's mandated in Nigeria and Ghana. So while not mandated in Kenya and Rwanda, the requirements by the regulators in those countries are also satisfied eminently by the ISO 27032. And we have a similar situation with the NIST cybersecurity framework, which provides guidance on managing cybersecurity risk. It's not mandated in Nigeria, it's mandated in Ghana. It's not mandated in Kenya, but the requirements of the regulator in Kenya are satisfied by the NIST framework. And we can apply that as well to Rwanda. And then for cloud security, as you probably would know, a lot of the fintechs would prefer to have their infrastructure on the cloud for the various advantages that they can derive from it. So we have the ISO 27017, which provides guidance, when it comes to cloud security, to have a safer cloud-based environment and reduce the risk of cyber breaches. So this standard is mandated in Nigeria. It's not mandated in Ghana. Neither is it mandated in Kenya and Rwanda. But again, it helps in satisfying the other requirements from the regulators in those countries. And then for business continuity, which is also very critical, we have the ISO 22301, which is mandated in Nigeria, not mandated in Ghana, Kenya, and Rwanda, but it's a very, very good standard that helps organizations to satisfy the requirements that are prescribed by the regulators across these other countries. Then for cyber response, we have the ISO 27035. It's not mandated in Nigeria, but it's mandated in Ghana, not mandated in Kenya and Rwanda. Again, it helps in putting in place the necessary structures to be able to respond adequately to cyber incidents. And then we have data protection. So across virtually every country now, we have data protection regulations or laws that are mandated. Compliance is mandated, and you can see that across the various countries here. In Nigeria, we have the NDP, NDPA. Then we're in Ghana, we have the Ghana Data Protection Act, Kenya, the Kenya Data Protection Act, Rwanda, the Rwanda Data Protection Act, and that cascades across the other countries. This is mandated for all the operators. Now, as a simple example of the situation where I said that the standards may not be mandated expressly, but you find that compliance would be enabled when you implement and sustain those standards. An example is the Rwanda regulation that is given to the payment service providers. And as you can see underlined, it says that payment service providers are expected to take into account international best practices and standards when designing and implementing the technology and specific risk management systems and processes that will be put in place. So it would help them to ensure that they actually comply with the regulations from the regulators. And talking about the regulators, interestingly, the Bank of Ghana, the Central Bank of Nigeria, and the National Bank of Rwanda themselves are certified to the ISO 27001, which is the Information Security Management Standard, highlighting the importance of this standard for them as a regulator and for the operators within that industry. So that's a cue that others within the fintech space should take. Now, in terms of roles, we've talked about the various standards and the requirements. But in terms of roles, this is what it looks like across some of these countries. So in one of them is the appointment of a director, a very senior person as a director for cyber and information security. This is not mandated in Kenya. It's not specified in Nigeria or Ghana, but in Ghana, it is required that a very senior member of management staff, of senior management, should be appointed as a director of cyber and information security. And then we have the appointment of a chief information security officer. So this is required in virtually all the countries. It's a very important appointment. And anyone who is implementing the ISMS, the ISO 27001, would be required to appoint someone who has the authority as chief information security officer. And the CISO have various people that they report to in various jurisdictions. In Kenya, it's They report either to the CEO, the CIO, Chief Operating Officer, or the risk function. That's the Chief Risk Officer. And they are expected to put compensating controls if they'll be reporting to the CEO, because the ideal practice is not for the CISO to report to the CIO to prevent any conflict of interest. So if that has to be the case, because we understand that some of the fintechs may be constrained in terms of resources of employing quite a number of people. So if they have to appoint someone as a CISO and have that person report to the CIO, there has to be very rich compensating controls for that. In Nigeria, the CISO is expected to report to the MD CEO, and in Ghana to the Director of Cyber and Information Security. So what are the imperatives when it comes to governance in order to ensure that we have a balance between conformance and performance? The McKinsey have actually provided us a framework for that, and it highlights three major areas. One is culture and capacity building, another is stakeholder engagement, and the third one is talent, strategy, and HR. So let's look at culture and building. It's important that we set the tone from the top, and in quite a number of organizations, the issue of corporate governance is very, very important. And it's something that is very important for the fintechs, given the kind of business they do and the way they grow. Most of them, they come off as startups. So it's important to have very good corporate governance in place. And embedded within that corporate governance should be IT governance, which would help to mitigate risk, ensure performance, and the creation of value for the organization. This will help to balance conformance and performance. And in order to achieve this, the best practice frameworks and standards, which I mentioned earlier, would help the organization to be able to achieve this. And there are various standards and frameworks across various domains, IT domains, as you can see on the screen. We have some for information security, for business continuity, IT service, IT governance itself, project management, that help to support organizations in putting in place the best practices when it comes to governance and ensuring that we have appropriate controls across these various IT domains. And these best practice frameworks and standards, they provide a number of benefits. One is that they provide clear guidance, which enable us to have a structured approach to regulatory compliance. By their very nature, they have a structured way in ensuring that we comply. And also very critical to the various best practice standards and frameworks is risk management. They help in identifying risk and mitigating them. They also help in ensuring that we have operational efficiency and governance that is achieved through process standardization. By their nature as well, they place a lot of emphasis on having very good, efficient processes. Then quite a number of them also touch on data protection and privacy compliance. And just as you implement these global best practice and frameworks and standards, they enable you to also comply with your local data privacy requirements. And given the nature of these best practice standards and frameworks, in that they are global in nature, they are not tied to any particular geography. They facilitate cross-border compliance. So once you are able to implement them within one jurisdiction, it's very easy for you to operate across borders and to scale. They also help in enhancing transparency and reporting. So there is also a lot of emphasis within these best frameworks and standards on having streamlined audits. They have processes to ensure that you have audits that provide assurance and that also enhance regulatory reporting. And all of this give the regulators confidence when they are relating with the organization. When they see that you have all of this in place, there's a very favorable way that they look at you and your operations. So it also promotes innovation while ensuring compliance. Like I said earlier, you're able to have that balance between compliance and conformance. Now, moving on to stakeholder engagement, one other very important thing is collaboration, cooperation, coordination, communication among the operators within the space. So, and that's where an organization like the Africa Fintech network helps or come, on the scene. They provide a platform for operators within the industry to be able to relate and provide resources to one another. And in the various countries as well, we also have various fintech organizations that also provide this. So this is also very, very important. And we are very happy to partner with the Africa Fintech Network to provide you this information this morning. Now, the third leg is talent strategy and HR. And we have a skills challenge globally when it comes to IT and information security. But it's even more pronounced here in Africa. Like I highlighted earlier, we have a brain drain, we have a very weak supply system, even though the demand is growing. So what are some of the things we need to do? We need to dislodge structural barriers. So looking at the various barriers we put into employment, for instance, we need to look at it. What sort of people do we employ? We put some artificial borders, in terms of the kind of people we can employ. In some organizations or some countries, there are certain restrictions, if you like, in terms of the minimum academic qualifications that people can have before they can come into the field. So that's something that we can look at, because if these people have the skills, we can, still bring them on, train them, and bring them to the level that we require. It's also important to embrace diversity across various domains. The more diverse the workforce, the more productive they would be, research has shown. Then it's also important to intentionally build overcapacity. We've noticed over the period that because of this skills shortage, the migration and all of that, within a very short time, a team that is put together would be depleted because of the movements. So it's important to build overcapacity so that when someone leaves, you have people who can continue to keep the work going. And it's also very important to ensure that the team is not overburdened. So we must be very deliberate about ensuring that we provide the kind of environment that prevents burnout. And very importantly, as much as possible, let's automate. That way we can reduce the risks that are attendant with human intervention and also make things as efficient as possible. So in conclusion, some of the pitfalls we need to avoid, we need to ensure that there is adequate authority at various levels in terms of decision making. We should understand that we cannot take a quick fix approach. It's not a sprint, it's a marathon. We should also avoid the box ticking approach as well. That also would not yield the desired value. And we should not lose focus of our business and safeguarding the assets of the organization and of our clients. So how can Digital Jewel support you with this? We provide a wide range of services, like I mentioned earlier, supporting organizations to implement these best practice frameworks and standards. And this help in ensuring that you comply. And that's across the value chain. So in terms of diagnostics, audits, assessment, and reviews, there are various things we can do, including gap analysis to show you where you are currently and what your requirements are for these standards and these regulations. We also help in setting direction and giving you a roadmap that would help you to close the gaps that are identified. And then we provide project management support to ensure that this is delivered in a very optimal manner. And we provide certification both for the individuals in the organization and the organization itself. So these are just a few ways that we can support you, and we can discuss that much after this webinar. So we have quite a number of regulations across the various domains, like I mentioned, which fintechs are required to comply with. We just have a few listed here. I'm not going to go through them one by one, but you can see they cut across data protection and a number of other areas. These are some of the ones that you are also required to comply with in Rwanda and in Nigeria. The central bank has a very long list of requirements for fintech operators. Even the Securities and Exchange Commission, which regulates the capital market, has its own list as well. And there are other regulations that are required for compliance. And in Ghana, we also have from the Bank of Ghana, from the Securities and Exchange Commission, and for data protection. So Thank you so much for the time.
Thank you, Tokumbo, for that very enriching information. I think the last around 3 or 4 slides, they look like a maze. And I'm sure we all look at them and we're wondering, where do I start? What corner do I take? What kind of bumps do I have ahead? And I think we'd like to have that conversation at this time. And we'd like to have that conversation for some of the fintechs who have actually gone that journey, had these compliances look like a maze, but have navigated through them. And I think these conversations will encourage the rest of us and also give us a level of visibility that is quite critical for us to be able to build a successful businesses and fintechs as we move along. Thanks a lot, Tokumbo Taiwo. That was very enriching and that was very informative. And I think I appreciate those pointers that you've shared with us on how to build it successfully and to build it for the long term. I think for this session right now, I'd like also to still encourage us as you log in. Kindly let us know where you're logging in from. Post your question in the question and answer chat box so that we can be able to address some of them as we move along, and we can be able to ensure that we are all edified at the end of this session. So for this time, I'd like to hand over to our MD CEO for Digital Jewels, Madam Adedoyin Odunfa, to take us to the next session. Kindly, MD, take it away.
Thanks, Michael. And thanks, Tokumbo, for setting the stage with that presentation. Helped us to understand, the tremendous growth that we see in fintechs, the challenges, some of the challenges they face, and the role that governance plays. So our topic again for today, even as I welcome everyone once again, and thank you for joining us from Zambia, from Kenya, South Africa, from Cameroon, from Lagos, from across the continent. Welcome. We're speaking again today about the fintech dilemma of straddling exponential performance, which is the side that the fintechs like, but also balancing it with stringent conformance. And that is what we're going to be speaking about today. So I'm going to set a little background. I'm going to introduce our panelists, who I welcome very warmly. Thank them for finding time to spend with us. And then we'll go straight to hear them share some of their perspectives, their experience, some of the critical success factors, what has worked for them with us all. And as I go through the background, I'd like Njoki to please also switch on her video. So today we find that Africa has become a hotbed of innovation and entrepreneurship. We see the proliferation of startups rising to prominence and achieving unicorn status. Specifically, Africa is the world's fastest growing continent when it comes to fintech revenue, with a compound annual growth rate of about 32%. This means that by 2030, the African fintech market will be worth around $65 billion. And this is according to research by the Boston Consulting Group. And so as fintechs become the fastest growing sector, if we like, in Africa today, riding that quest of digitization and payment flows across and beyond the continent with the innovative customer-centric solutions they provide, they clearly have the potential for exponential growth. Indeed, several have demonstrated this capacity and attained unicorn status. Now, this is not without its challenges and risks, some of which include funding, operational issues, infrastructure, fraud, cyber attacks, I've spoken to some of them, skills shortages, and others. Indeed, the staggering statistic tells us that only 8% of startups make it to Series B funding stage, with many shutting down before reaching their potential. That's a dismally low figure. So the question that we will be tackling in our panel today is, what role can enterprise governance, and by this I mean business, corporate, and IT governance, play in strengthening the fabric of fintechs to ensure that balance between performance, exponential performance, and stringent conformance? Where is compliance needed? And in what practical ways can fintechs build a culture of compliance in the quest for exponential growth? As a firm, for us in Digital Jewels, we work a lot with financial institutions, banks and non-bank financial institutions. Increasingly, we have a whole portfolio of fintechs as our clients across the continent. And clearly innovative, very, very fast-growing companies, but oftentimes what affects the sustainability of these organizations is governance. So our panelists today are going to be sharing their perspectives. We have with us Ken, who is a Kenyan tech entrepreneur, a scale-up coach, and a digital evangelist. He's widely known for his role in co-founding Cellulant, a Pan-African fintech giant connecting entrepreneurs and innovators across Africa through seamless digital commerce. Ken served as Cellulant's group CEO for more than 17 years, steering it to unprecedented growth, currently operating in 35 African countries with millions of end users. As Cellulant's founding CEO, Ken led the company from an idea sketched in 2002, and I know he likes to tell that story, to a reputable company in Africa with more than 350 employees across 11 markets. So Ken has added his focus to Pani, a boutique investment firm empowering the next entrepreneurs and the startup ecosystem in Africa. His firm offers exclusive coaching and cash investments to promising founders in exchange for equity. So I guess this position is because he understands really that journey of the fintech. We also have with us today Njoroge, who is a seasoned financial specialist with over 15 years in financial technology, investment banking, trade finance, and development finance across solutions, particularly for SMEs. As CEO of Mamalaka Hub and Spoke, Njoroge leads the efforts to support business growth through cutting-edge financial solutions, fintech solutions, focusing on decentralizing finance and the integration of ESG matrices into financial reporting. Her role involves the origination and execution of trade finance transactions, overseeing capital raises, and ensuring the compliance with industry regulations. Our journey reflects a commitment to excellence, innovation, and the advancement of financial inclusion in Africa. Welcome, Njoroge. Also with us, we have Patrick, who is a technology leader with 17 years of experience in delivering innovative digital products from strategy and definition right through to operational execution. He's currently the Chief Product and Technology Officer at Rainbow, where he leads the product engineering and security teams to invent innovative products that meaningfully improve people's. Rainbow's fintech product, Pay, enables Rwandan citizens and foreigners to securely pay for over 200 public services online. In his role, Patrick oversees the design, planning, and implementation of strategies to continuously elevate the company's and safeguard citizens' privacy. So welcome, Patrick, welcome, Njoroge, welcome, Ken, and thank you for finding time. So let's get straight into it. And I'm going to start with you, Ken. Cellulant is an inspiring story, and it's a good example of a fintech enjoyed phenomenal growth in many stages of its existence. How has business and corporate governance contributed to this growth, if at all? Ken.
Thank you, Dedoyin, and good afternoon, good morning, everybody. I think that's a good question because I think very early on, we instinctively had this notion that actually governance was going to be a foundation for growth. I think if you speak to a chairman who's been a chairman of the group from when we were about 7 in the company, the foundation of growth was going to be governance and innovation, and both were sort of two pillars that were super important. And I think, I say, the saying goes, it doesn't go wrong, it starts wrong. The converse is actually true, that it starts right. So when governance is sort of seen to be such an important root, such an important foundation for the business, it becomes a culture from the very first go. And even then, of course, the shapes of compliance were not quite clear, be it IT, business, and so on. But just that foundation to drive governance and accountability towards it as a pillar for growth was such an important driver to our success.
Thank you. And that's interesting because you talk about governance, you talk about innovation, and you talk about starting with it. And I think just from looking across the fintechs that have stayed the course, it would indeed seem to have been a common factor. So in the last webinar, we had the group managing director of InterSwitch, who gave a similar perspective about sort of baking governance into the organization from the very start. So great start. However, I know that even with this growth, it was not without challenges, as would be for any other business. So Cellulant has had its own share of challenges, and some of it being on the compliance side. What lessons have you learned from such challenges?
Yes, I think the basic cause of our challenge in compliance and governance was essentially just a tug of war between good compliance and good governance, which is, you could say, has no gray areas, right? At its greatest form, there are no gray areas. And then the basically quest for growth, which also has no gray areas in terms of its reward, right? So for fintechs, the shareholder reward is significantly skewed towards pace of growth. And so that this becomes quite a significant tug of war between these two universes that are typically not ambiguous about what should happen. And then, if you look at all sort of the 4 key challenges any fintech will struggle with. Number one, it's a new area. So regulators are regulation is coming up and it's trying to catch up. Number two, when you are growing, you're growing across jurisdictions. So the regulatory landscape is essentially changing from one country to another. And then you're trying to innovate products which by nature are difficult to classify. And then you've got a skill base that is sort of growing. So the mature skill sets in technology and governance are found in actually more mature companies. So when you put all this cocktail, it just creates a lot of challenges by nature. And I think that's for any CEO that's sort of running a fintech, that chess game is always going to be the thing that you have to really play well. And Adetoin, sometimes the game wins, sometimes you win. So there are times you go across borders and you run afoul of compliance. There are times when, as you're growing, you basically leave yourself exposed to fraud and all of that, these kinds of things. I think what was always the key is, I always say, is to treat every compliance incident like an air crash investigation, right? So when it happens, doesn't matter how small it is, everybody gets on top of it. You flag it at the top, you pore over it, you understand what happened, what went wrong, who did what corrective action needs to happen. And I think that kind of signaling, and if this then becomes habit over time, then the power of compounding, of just getting better, in the end, always puts you on the winning side. So that then the benefit that you get from growing fast versus the regulatory infractions or the challenges or the gaps that you create are sort of have a balance where you're actually growing and you're not causing too much harm to their standard of governance.
It appears, I don't know if I'm the only one who can't hear our CEO.
Yes, I'm not out for that. Apologies for that, and I'm not taking it now.
That's okay. That's what I thought.
Go ahead. Only happen in Africa. But you can hear me now? You can hear me now,
yes,
right?
we can hear you now.
Okay, great.
I can certainly hear you, Adedayi.
Yeah. And I think it was quite profound because you spoke about that tension that I know I see in fintechs, and I'm sure a lot of the fintech founders and professionals can relate to that tension of the pressure of growth and also the different shifting regulatory environments, especially when you're working cross-border. So those are very real tensions that every fintech will go through. I think Tokumba also painted a good picture of trying to highlight how the regulatory environment is different, from when we go from one country to the other. Even within West Africa, from Nigeria to Ghana is different. In East Africa, from Kenya to Rwanda to Uganda, it's all very different. And so I guess the first step is really understanding what those regulatory requirements are. And then the other thing I picked from what you said is this sort of zero tolerance approach. So where there is non-compliance and we identified, we want to treat it, I think you said like a train crash. So it's a major issue and we need to deal with it as a major issue as opposed to sweeping it under the carpet. I think this is important because I know that, dealing with a lot of fintechs, nobody sort of wakes up and thinks, okay, my job today is to make sure that I'm in full compliance. It's like, let's go out and make some money, which is clearly the reason why the organization is there. But the key thing I think I take from what you say is that if we don't take the compliance side of it very seriously, then it will limit our growth. And when you spoke earlier about starting off from ground zero with governance in mind and with a board, and that you still have the same chairman, that also speaks to stability. So that creates a context also. Again, I know that a lot of the fintechs, especially the very early stage ones, think, I'll deal with the board later. Let me make money first. But perhaps you need that board from ground zero so that you can make that money sustainably. So thanks. Quite a lot of interesting nuggets in what you have shared with us. I'll go to Patrick and would like to hear from Patrick. Rainbow, as many of you know, is a public sector fintech. So it provides, as I said earlier, on services to citizens. How has your public sector heritage in Rainbow influenced your perspective and practice of governance, risk, and compliance in general, and IT governance in particular? Patrick.
Okay, thank you very much. Thank you very much for the question. I think the fact that we are providing government services, because we are also a private company, but we provide government services. So we are positioned in the mind of the citizen as a government entity, even if it's not the case. But that positioning itself makes us very stringent on compliance, because that's what the citizen expects from us. They expect to see us, the government, in action. And the government, by definition, they are there to apply governance, they are there to apply compliance. So that is something that is very important for us, to make sure that we adhere to all the compliance. But we also have to play with the challenge of innovation. So for us, it's not necessarily immediately the growth, but also the innovation, because we need to innovate for citizens. So we have this tension between innovating for the consumers and then staying compliant with the government regulation. And then the challenge that comes with that is that usually government, they think mainly for compliance purpose. So when you want to get your certificate, you have to follow a specific rigid process. But for us now, we want to bridge that to offer a very simple experience to the citizen while staying compliant to the government regulation. So that's the interesting. It's also an interesting challenge that we are playing with, and also goes with everything around payments when we want to make things very simple in terms of payments, but the government also want to have a very clear traceability of all the payments that are happening for what and things like that. So those are different tensions that we are playing with, but I think it's an interesting game to play for a moment that we stay creative, we stay open, and we aim to stay compliant as well.
Absolutely. So you speak of a slightly different tension, which is innovation to simplifying the process, the customer experience on the one hand, and on the other hand, Rwanda, who a lot of us know, we do business in Rwanda, we know that it's a very compliant organization. So there's a very stiff compliance regime there. You must comply, but at the same time, you want to make it simple. Okay, so that's an interesting balance to try and strike. And I know that, we had the privilege recently to certify Rainbow to PCI DSS. So why did you go that way, and in what way has accreditation Rainbow in tangible terms, especially as it relates to your product development and strategy and trying to strike this balance you spoke about?
Okay, I think the way we think about compliance like PCI DSS is not for the sake of compliance, it's for the sake of better serving our users and our clients, right? So because by being PCI DSS compliant, you convince yourself that you are up to the standards in terms of security. That's the first thing. You have to convince ourselves that security-wise we are very good. And then now, once we are convinced of that, we can now share that message with our users, with our clients. So now, when we want to elevate, because for us, elevating our security posture is one of our key target or key metric that we track internally. And now, in the presentation before, I think Tokombo talked about the fact that frameworks or these standards gives you a very good framework to structure your approach. So for us, when we think about PCI DSS, it's not only for compliance purpose, but it's also to better structure our approach to security in a way that is widely or internationally recognized. And then when we are doing that, we also check the box of compliance. We are just killing two birds with one stone. Yeah, so that's how we think about it.
Thank you, and I like that perspective. So a lot of times I see that the fintechs just look at the best practice standards just for compliance because the regulator wants it. But you have said we see value in this, in embedding the controls into our processes such that, we make sure that we have stronger, more secure processes. In doing so, then it's great. So I think that's really the way to look at the adoption of global best practice standards. So are you going to be stopping at PCI DSS? Do you see Rainbow implementing more and more of these standards?
Yes, definitely. So it's on our path of to create more maturity, to increase the maturity level of our security posture. So we go step by step, and then I believe that as we are moving forward, we implement more standards. Because for me, the most important thing is that it gives us a framework to think about it. It gives us a framework to communicate about it, even internally with our boards, and then with other stakeholders. I think that's the most important thing for us. And then I also like the fact that in the presentation that Tokombo shared, that was showing how when you are doing it for yourself, sometimes you're also checking some compliance box, even if the regulation is not asking explicitly for it. But it gives you that framework because you don't want to be driven by a regulation agency. You want to be driven by something that is much more international and widely recognized. And then at the same time, checking those boxes of compliance here. So that's great. Yeah.
Exactly. I often say that if you wait for the regulator to beat you with a stick to comply, then all you're doing is competitive necessity. That means you can't play without it. But if you go ahead of the regulator, then you get some kind of advantage, and benefit to yourself and your clients. So thanks for sharing those good perspectives, Patrick. I'll move quickly now to Njoki. And Njoki, what role do you see governance, risk, and compliance playing in smaller fintechs? Because I know you run a fairly early stage fintech. Is this an initiative in your view that you can lead later on? So let's get big and then we start doing all these GRC issues? Or is it something that you think that even small fintechs need to be thinking about and doing at this time?
Indeed, thank you. Yes, I believe it's been imperative for us because setting up a strong foundation for our business model required that we adhere to the regulated security standards. We've been looking at integrating governance, compliance, and risk management is essential, especially for the small fintechs, because we are looking at long-term sustainability. So having the structures under governance, looking at the risk, identifying the risk and mitigation strategies, we'll look at promoting not just our business model, but also demonstrating to our clients our commitment towards having a secure platform and integrating the GRC tools within our business model.
Okay, excellent. And I think you've led by example somewhat. We had the privilege of implementing PCI DSS for you. You know, what was the propelling force for you so early in your journey? And what benefits have you seen accrue because of your certification?
Indeed. Being a small fintech, we decided that laying down the foundation and the groundwork was important from the outset. So the first things we're looking for as an early fintech is growth. That's what you're thinking of scale. So looking at scale, you have to look at establishing that secure framework so that as you're growing, you're meeting industry standards. We're also looking at partnerships as a small enterprise to grow so that partnerships will only give you the market advantage, but the partners that we are seeking to work with will work with businesses that adhere to regulated and recognized security standards. So for us, the three key things was the market advantage, looking at trust, which is important, as my panelists have also mentioned. Trust and confidence is what the customers will run to. Then retaining them also, as them having the PCI DSS also looks at retaining them because they can see you're demonstrating your commitment towards storage of their data security, and also avoiding hefty penalties that can penalize that can cripple a small fintech. So those were the whys.
Excellent.
The benefits. We enhanced reputation as a small fintech. It gives you a really good edge in the market to differentiate you from other fintechs when you demonstrate your security standards, as well as critical was to have an incident preparedness plan. We wouldn't have done it without having gone through the PCI DSS with digital jewels. That has been essential to help us prepare for and manage incidents because they would happen. So we thought going after it would help us mitigate because they are bound to happen and have a plan in place to also for business continuity, not just us, but also for our customers.
Thank you. So you said, first of all, it's creating a solid foundation for growth because you're small today, but you're planning to grow really big. So you want to make sure that you've got that foundation to scale from. That's interesting. You also spoke about being attractive to partners. So you want to stand out because you've done this at such an early stage, and I know that in Kenya, especially, even some banks are not even PCI DSS certified. So it's quite impressive that you have taken that journey so quickly. And then, of course, building trust. And then you speak to some tangible benefits of best practice standards like your incident response plan and so many other controls to make sure that you're able to grow sustainably. So thanks. I think that's been very valuable. And I'm going to come back to you, Njoki, but I'm going to go quickly to Ken again. And so, Ken, you've spoken a little bit about the Cellulant journey. Just making sure that Ken is here. I can't see him. All right, great. Thanks, Ken. So you've spoken a little bit about the Cellulant journey, but now I want us to move to Pani. Having stepped away from Cellulant in an executive capacity, you co-founded Pani, I think, a couple of years ago. And this is a venture capital club that seeks to build the next generation of stellar tech businesses through coaching, mentoring, consulting, and scaling. So from your experience at Pani and even before that, what are the top 3 challenges that tech and fintech businesses especially struggle with today? And what role can business and corporate governance, IT governance play in addressing these challenges?
Yeah, it's an interesting question because this particular segment is certainly the most funded over the last couple of years. So quite a couple of, I think maybe 60-70% of funding over the last couple of years has gone into this particular segment. I think by count, there are about 1,000 fintechs or so. I think the top 3 challenges which I see, I think the first one is basically despite the fact that there's a lot of capital that has come into the space, there's just about 1,000 fintechs sort of looking for this capital. So you could generally say that relative to the opportunity, capital is still very scarce. So finding the right match of shareholders for right match of capital and of investors and of shareholders for fintechs is probably challenge number one. The second, and of course, that also creates a second challenge, which is to sort of have a competent, aware enough and locally engaged enough board of directors that essentially form the tone at the top when you're thinking about business, IT compliance, and so on. And you know, technology is a sort of foundational building block. So compliance there is also important. And I think that challenge, I would say, is just top team availability, formation, availability, and dynamics. And so I can tell you generally from what I've seen, in the first 1 to 2 years, I don't see what the kind of example that Jockey and the Jockey's team is actually setting, where you have governance as an early area of focus. So you don't see sort of compliance expertise in the first 2 or 3 years. So it generally means that there is an opportunity to sort of drive governance as a really important foundation for growth. So those are the top 3 challenges. So in summary, the right capital, right shareholders, creating obviously the right level of board with good understanding and speed, which is needed at the early days, and then just top team composition and top team availability with compliance in the team.
Excellent, thank you. And I believe that these are some of the challenges that Pani is trying to help the fintechs with. You know, I know you speak about patient capital and actually even looking for the funding from within the continent, where the shareholders therefore should have a better understanding of, you know, of the challenges that these fintechs face. So thanks, but I'm still going to ask you one more question before I quickly move to Njoki. Ken, I think your video has gone off. I don't know if it's just at my end. And I'm going to talk about this, the big elephant in the room, which is about cross-border. Every fintech typically will aspire to participate in cross-border payments. Yet this varying regulation from one country to another, and even within the African context, makes this navigation quite challenging. Do you see the adoption of global best practice standards helping to simplify this, or, you know, or smoothen it in some way? You know, in which, if so, are there any standards that come to mind? You know, and by this I mean that if every country, for example, were to reference global best practice standards, then the players know that these are the, you know, set of standards I need to meet, instead of having to study what does Nigeria want and what does Rwanda want and what does Kenya want, without any specific reference to, you know, globally accepted standards. What are your views on this?
Yeah, I think the sort of reference to global best practice certainly helps, because they're generally well developed. There'll be a good ecosystem of partners that help in the compliance journey, you know, such as what Digital Jewels does. So that creates predictability, creates a framework that's well developed, and an ecosystem of skill sets to essentially hold a business to the journey of compliance. I think there's always going to be a layer of localization because part of what makes fintech exciting for the continent is just the fact that there's certain flavors of services that are really just only very specific to Africa. But I think even with that sort of blend, we shouldn't reinvent the wheel. Where global standards are fit for purpose, we should just adapt them. It makes it easy to generally be able to go across borders. I don't get a sense that that's typically how regulators approach compliance generally. But there's a lot of opportunities probably to come together and to educate regulators to sort of build a lot of the foundation on frameworks that work and that can be adapted for our continent.
Excellent indeed, and I agree with you entirely. I'd like to actually call Dr. Patrick Cote now, because I know that AFN, African Fintech Network, has done some work and continues to try and address this issue of changing regulations across the African continent. Patrick, do you want to share with us what is being done?
Yeah, thank you, Dorian. Thank you all. Great conversation, Ken, and the rest of the panel. Great insights. Regulation is the elephant in the room. We can spend the entire day here discussing issues about regulations. But at the network, we often need to take a step back. It starts here in the mindset. I think what Africa has suffered is the fact that since we were established, I want to use that word as Africa, we were established in a fragmented manner. We were established sure that we cannot work together. So 54, 55 countries, 54, 55 different problems, especially policy and regulation. So that's still, it's already high in the mindset. And number two, let's understand where all of this is coming from. Fintech in Africa, max a decade? Yeah, maximum a decade. So it's a new phenomenon. And we have financial systems that have existed for centuries. And these systems are defined in their own ways. They were set in a regime where physical money is the order of the day, where there were no telephone, no means of interoperability were in existence, and they've existed and they've survived. So for that to change in a span of 10 years, we must be joking, right? So at the network, we often say, let's face the realities. This is a slow change process. It's a slow change process. As recent as March, we conducted, we're actually on a project that is being funded by the African Development Bank. The aim of that project is to develop a hub that is going to be called the African Fintech Hub, which is meant to spotlight major happenings, most specifically bring fintech associations and fintech together, and specifically narrow down the issue of regulations, so that at least, for instance, a fintech in Rwanda, can go in and read regulations in Kenya, in Nigeria. And we did a needs assessment, and a key finding of that needs assessment, this is a survey that was properly structured that we conducted alongside Sentry, a reputable firm. And one major finding, which is not surprising, is that regulations remain a thorn in the flesh. And a thorn in the flesh, not only for startups that are less than 3 years old, also for existing startups that are scaling up, that may have gone for Series A, B, C, D, even for unicorns. So that's the reality of regulations in Africa. And it's much more difficult because, as I said, it is fragmented, it's diverse. You operate here in Nigeria, you want to operate in Ghana, it's an entirely different ballgame. Of course, if you want to go to Kenya, it's an entirely different ballgame. So the question is, what do we do? But we often start from this point. Let the fintech, the ecosystem players, the providers understand what is happening on the point of view of the regulators, number one. So if you're a startup from day one, do your homework, at least read around broad issues like consumer protection, data protection, anti-money laundering, and combat terrorism. Just read around those things. So you have a broad idea of jurisdictions that you operate and what obtains there. Regulators themselves have complex array of issues. Put the money of funding aside for them to get funding to do all of this. Now look at the way fintechs operate. Look at the issues of regulations. Take a tree, like look at a tree, a full-grown tree. Look at the roots. So the roots here are what we call the baseline regulations. What laws establish the central banks, the laws that mandate them what to do and what not to do. Those baseline or root regulations are outdated. Those root regulations were established, as I said, in an environment that was not digital, in an environment that was analog. So now they need to change those root regulations. That's the foremost challenge they face. And these are regulations that have existed for centuries, as I said. Then look at the tree, the trunk. So the trunk is what to describe the underpinning technologies, you know, the cryptographies, you know, the sort of digital technologies, all of it, you know, that underpin the activities that the tech are doing. The regulators don't understand the trunk of what people are doing. They don't understand those underpinning technologies, let alone, you know, crafting regulations around the trunk, around the underpinning technologies. Then look at the tree itself, the leaves. Those are the activities, you know, like the fintechs, the payments, the digital lending, the insurtech, the edtech, the activities that you do. They don't understand those. They don't understand the leaves of the tree because it's all new to them. So that is how complex the landscape is for them. On top of that, so they need money, they need capital, they need capacity to understand the entire tree. So that's for the regulators. Now look at the fintechs themselves. So this is the challenge you face. These are novel ideas, fantastic, new, you know, reaching the unbanked and the underbanked. You want to go out and roll, but this is the nightmare you face. So we say, number one, do your homework. Number two, try to partner as much as you could. Don't do it alone. It's far gone for us to go on a solo basis. Oh, this is my idea, I'm alone. No, you need a finance guy, you need a compliance guy, you need a board. I think it's Ken or somebody who said, have that compliance mindset from day one. You may have the tech idea, but you don't have the other skill sets. So have that compliance mindset that for me to succeed, it cannot be one mile. That's number two. So number three, you know, is engagement. I think Ken or somebody has been mentioned it. What we are encouraging at the network is collaboration. That's our operative word, cooperation and collaboration. So because these regulators have this nightmare of problems, you need to play alongside them. How do you play alongside them? Be part of an association, be part of a club, whatever you call, of tech people that can really speak as a single voice to the regulators. So you got to meet, you got to have a meeting of the minds to understand each other so the regulators at least second guess what you're doing. Not to steal the show. As I said, this is the subject we can go on for the rest of the day. So what are we looking at? In view of that report, what we are doing is a couple of things. We are encouraging cooperation, collaboration, importantly. Now we are looking at what we call regional sandboxes. You know, we think an intermediate step is to encourage regulators and stakeholders to start gravitating towards what we call regional regulatory sandboxes. Say in East Africa, if you have a regional regulatory sandbox, it becomes a pooling point for regulators in that region to start aligning. I'm not saying harmonize, aligning regulations, you know. And so that's our immediate dream as a network. And our medium-term dream is that if you have 4 of these regional sandboxes, East Africa, North Africa, West Africa, and South Africa, hopefully with funding and cooperation with other partners, we are looking at creating what we call a Pan-African regulatory sandbox that will sit somewhere that will sort of unite or synchronize regulations, policies when it comes to fintech for Africa. So in essence, what we are doing at the network is to present Africa as a single market for fintech to thrive. Market integration, regulatory integration, policy integration is a huge dream, but we are taking it one step at a time. Or with the cooperation of everybody in the space, we'll be there one day. Let me stop there.
Thank you, Patrick, for sharing that. And, you know, he said a number of things, knowledge, the 3 pillars that I recall he mentioned, knowledge, collaboration, and cooperation. And as they say, knowledge is power, and ignorance is not an excuse. You know, you need to be armed with the knowledge, What do the regulators want me to do? What is required from me? Organizations like ourselves can help you, can provide that information for you. So knowledge. And then cooperation and collaboration. And the FinTech network, I think, is a great example of a network that allows you to interface with the like minds, and then, of course, gives you access to the key stakeholders that you need to partner with. So today, I mean, they say again, if you want to go fast, go alone. If you want to go far, go with others. And that's what this kind of networks are about. And so if you're not part of your own local country network or AFN, do make sure that you're part of this. He spoke about, some of the solutions that they're coming up with, and the essence is to bring the regulators and the operators together, in the same room, because he told us to understand the mindset of the regulators. And there is change happening. I did hear you say it will be slow, so we should be patient, right? But it's happening. And I think the most important thing is that we can all be part of this change. We can all do our bit to make sure that we're making the ecosystem much healthier, much more sustainable, better governed, better controlled, so that we can have a healthier continent. At this point, I'm still going to come back to my panelists for one final word as we close, but I'd like to check if we have any questions from our audience, from those of us who have joined us this morning or afternoon, depending on where you are, or maybe even night. So do we have any questions or comments?
Yes.
If you do, I think we've got some in the chat box.
Yes,
Yes,
there's
Michael?
there's one question that had been posted by Ajay Moro, and he was asking the issue of cross-border payment. This has been a major challenge facing Africa countries. What is the role of fintech in facilitating cross-border payment to make trade among member states easy and convenient, especially with AFC FTA on board? I think that's the only question that has been posted right now.
Okay, so Patrick, do you want to give it a question? Yes. Patrick, please go ahead.
Yeah. So, I mean, I think there has been significant improvement in cross-border payments. Before the advent of fintech, it was a nightmare. It has to be through a formalized financial institution, a bank. You will all know, for you to transfer in excess of 10,000 in any jurisdiction in Africa, it's a ton of paperwork, right? It's a ton of paperwork you need with banks. But that has changed fundamentally with the advent of fintech. I mean, look at fintechs like Flutterwave. Flutterwave. Look at Wave Money, for instance. A lot of them. I'll sit here with a click of button on my phone. Really, I can transfer funds almost anywhere. So that's just broadly, right? So fintechs are actually playing that space. In fact, if you look at the 8 fintech unicorns currently in Africa, almost all of them are in the cross-border payment space. In fact, that is Africa's strength when it comes to fintech. Our strength is in payments, digital payments, be it domestically or cross-border. Yes, we are not yet there, but I'm saying generally it's far much better. We are not yet there because of the reasons I just outlined. Fundamentally, regulations need to be aligned across border. Fundamentally, fintechs find it very difficult to license across border. It took Flutterwave a huge lifting up for license to be given in Kenya or other jurisdictions. That is how complex the problem is. And so with one of our partners, we are looking at what they call Payment Service Directory, if people are aware of PSD. A PSD provides common standards for payments and other verticals. If that is again adopted as a standard for at least at regional or at the Pan-African level, a PSD will help to bridge that gap. Okay, but regulation remained the thorn in the flesh. And again, with one of our partners, African Nenda, I was at the African Union in July this morning. Already we have started advocating for what we call fintech license passporting. So a fintech license passport means if you are licensed in Kigali, for instance, at least within East Africa, that license should be valid. So if I'm licensed in Kigali, I should be able to operate in Kampala. I should be able to operate in Nairobi, for instance, in Lusaka, in Zambia. So that's currently one of the advocacy work we are doing, because payments is the lifeblood of everybody, right? From SMEs to individuals to corporate entities. So I agree with you, cross-border payments is still challenging, but we are saying overall, there is an improving trend. But for the regulatory fragmentation and diversity, which I've already alluded to, which is the space where the network is actually actively engaged through, as I said, a payment service directory enactment, hopefully in the next few years, through Fintech license passporting. I've already spoken about our advocacy work around facilitating or advocating for regional regulatory sandboxes. So yeah, slowly, but there are improving steps that are happening in the cross-border payments and vertical space.
Thank you. Michael, I think there are two others. Can we take them really quickly, and then I'll go back to the panelists for their final words?
Yes, I think the other question that has come in is actually about what you just mentioned, Dr. Patrick, on the sandboxes. Melissa from Joburg, Malesala from Joburg, apologies for that, has a question. Has a regional sandbox been contemplated in the IFTA or at the least been engaged? So basically asking... Mm-hmm. Sorry, so the question is, has the regional sandbox been contemplated in the IAFTA? And then the other one is, or at the least been engaged?
Yeah, I cannot speak on behalf of the AFCFTA Secretariat. I know we have engagement in time past, but not in current times. But as recent as July, I was a panel speaker invited by the African Union. So as high as that level, we have already started speaking about regional and a Pan-African regulatory sandbox, yes. And this is really for us as a network, this is our medium-term main agenda to facilitate or to help address the issue of the fragmentation in our data regulatory space in Africa. So there's discussion, but then I will note this and see if we can approach the AFCFTA Secretariat directly because they are here in Accra and see if this is the discussion worth picking up here. Thank you for that.
All right. I think the other question is basically on the practitioners. So is there a move for the coalition of policies so that practitioners don't have to go through the hurdles of conformity to individual regulations and requirements across regions within Africa? So I'm not so sure if these are practitioners from the business perspective or from the individual, but maybe you can just touch on both.
Well, I want to leave that to the panel, really. We have our views. Let me hear what the panel says.
Okay, I think in many senses, that question has been responded to in some of the comments that we had. Maybe it was posted before. I think Patrick has spoken extensively to that. But I'd also let the panelists touch on it. And so I have a final set of questions, one question each, for my panelists. And if there are any of the other questions that were raised that you want to speak to, please feel free to do so. So Ken, I'd just like to find out from you, what is the one thing that you think that you can recommend for the fintechs around the room today, around the table, to do that will improve their governance and ensure sustainability of the businesses? One thing.
I think by far that really starts, in terms of tone at the top, and that starts with shareholders and a board that actually sees governance as a value driver. I think once you get that right, you will make some mistakes, but you get most things right.
Thank you. So shareholders that see governance as a value driver. Perhaps the founders also, the fintechs themselves need to see governance as a value driver so that everybody has is singing from the same hymn book. Well, thank you for that. I can't see her video on. I wanted to get her own perspective on that as well, in terms of the one thing that you think that the fintechs, especially, the early stage small fintechs like yourselves, can do differently or can do to improve their governance and ensure sustainability. But maybe she's having challenges with her connectivity. All right, at this point, I think we had committed to making this a 1.5 hour session. So I'd like to thank our panelists very profoundly for finding time out of their very busy schedule. Thank you very much, Ken. Thank you very much, Patrick. Thank you very much, Njoki. And of course, so there are two Patricks. Patrick from Rainbow is the first one I was thanking. Patrick from AFN, we're partnering in this together. Thank you for the initiative, but I'd like to hand over to Michael now to close out on the webinar. Thank you very much to all who have attended. We really appreciate your attendance and your participation in today's session.
Thank you, MD and CEO. Thank you, everyone. I think there's just one last question, MD. I'd like to share this with you, maybe to just quickly answer it from Nixon in Nairobi, who has asked about open banking and banking as a service in Africa. What's your take on that?
Yeah, there's a lot happening in the space in Africa, which is really good. At the network, we keep saying Africa, we have missed it out when it comes to agriculture. That's the honest truth. We are still being credited of having 60% of the world's uncultivated land. We still cannot feed ourselves. We've missed it out when it comes to mineral resources. We have oil, crude oil, we have gold, diamond. We're still rated one of the poorest in the continent. But Africa has shown in less than a decade that we have talent, that we can think, especially in the financial services space. So in less than 10 years, we have at least 8 African originated or African-related unicorns. So that is how powerful we are. So for us at the network, we are saying, let's don't get it wrong when it comes to financial technology, fintech. So that's what we are saying. The only way we can get it right is for this time around for Africa to work together collaboratively. Let's present Africa as one space when it comes to technology, whether you're Francophone, Anglophone, you're in the East, in North Africa. So to that end, you have initiatives like open banking. But where is open banking come from? If you read into it, at least the literature, open banking came from the background of the need for competition, the need for customers to get value for their monies, for their products. And so it got to a point in the UK where customers were saying banks were bureaucratic, they were slow in response, service quality were poor. So that was a special committee set up, and the committee brought us certain recommendations. So one of the recommendations was that customers must have influence over their data. So if you are a bank, you have my financial records. Yes, you are the custodian, but I am the owner of those records. And because I am the owner of those records, I should have the authority and the mandate to instruct you, my bank, say for instance, to share those records with another service provider who may perhaps provide me better service. That's the genesis of open banking. And that has then evolved from open banking to open finance, which is now going beyond banking. You're looking at savings, investment, etc. And now you have open data, which is saying everything about the customer, all the records that pertains to my life, from birth to death, are my legitimate own, properties or assets, and I should have rights over them. So open banking is largely a new phenomenon here in Africa. As I speak, I may be wrong, but I'm not aware personally and professionally whether there are more than 3 jurisdictions with guidelines on open banking. I know Nigeria has one. I know Kenya recently, a year ago, started initiatives around guidelines and policy moves on open banking. So it's largely a new phenomenon, but it's something that we propagate very strongly as well, because it gives customer rights over their data. It opens competition, right? So it makes it very exciting. It puts the customer at the driving wheel when it comes to the provision of financial services. So we encourage countries, we encourage fintech to go into that space. Let me stop here. I would like to just end in just a minute. So just 1 minute speak on the issue of capital, which, I log in a bit late. If you look at the 8 fintech unicorns in Africa, yes, it's good. This is a global world, global capital. But we, in the network, we take a Pan-African approach to all of this. If you look at their capital structure, significant portion, at least 60 to 70%, capital coming from overseas, North America, Europe, Asia. The question as Africans is this in the best long-term interest of Africa? At the network, we say probably no. We think we are more on the no side. It's good. It's good, it's foreign capital, but is it in the long-term interest? We think no. It's good, but for a short-term interest. So that is why we saw in recent times, the last few years, because of macroeconomic changes in North America and the rest of the world, it affected the flow of capital into Africa, into startups in the space. So that is the change. When you depend on foreign capital, you're basically at their mercy. So now what we're advocating for African money for African tech. So when you leave this webinar, go today and know that the tech sector in Africa is a lucrative area. Encourage friends, encourage institutions, encourage VCs, big institutions that are African related, to invest in tech in Africa. Let African money be in Africa tech. That's the only way we can sustain the growth of fintech and digital technology or tech generally in Africa. I would like to end on that note. Thank you very much.
Thank you very much, Dr. Patrick. I think that was extremely insightful. We appreciate, and I'd like to, at this point, take that as the wrapping note of this webinar. I think we have all benefited from the wealth of knowledge from all the panelists that have given us their audience today. I'd like to thank everyone who has given their time, as our MD has just said, to be here today and to give their feedback and what they've come up with the different years that they have run the different fintechs. So thank you so much, everyone, for joining us today. We appreciate. I've seen teams from Addis, from Nairobi, from Kigali, from South Africa, Cameroon. Thank you, everyone, for your audience and for your time. I believe that has been an hour and a half that was enriching and that will change the direction of how you run your fintech today. Thank you very much. I'd like to call this fintech to a close at this point, and thank you for your time. Have a good day. God bless you all, and enjoy the rest of your day.
Thank you, everyone.
Thank you.